Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, so 9-day is supporting price, weekly pivot is supporting price, but the reality of this week is we are in a 2-day compression. Compression. You can see how tight the bands are. You can see that we're not really moving much. It, zoomed out at 50,000 feet. It looks like, call it, 15, 16 handles. In reality, at times, especially yesterday, it was more like 4 to 6. And the whole thing centered in the afternoon right here at around weekly pivot. You see here, here, and here. That was a complete sausage grinder. And the reality is we're in a couple days of compression in anticipation of probably the Fed today at 2 o'clock. We should get some volatility off of that. I would expect that to cause expansion out of these compressed hourly bands, the direction of which I don't know, and neither does anybody else, and I don't really care. So, the key is to be patient, to have some perspective. We're basically trying to figure out right now whether or not the fall wants to be upward or downward. Something where we're going to see unflinching support at the 9-day and we head up to 50 and beyond potentially. Or something where we're going to spend some time underneath the 9-day where we're going to be fighting with daily mid-band, potentially going to see daily lower band, something much more two-sided. I think that's all kind of in the hopper right now as we fight over weekly pivot in anticipation of the Fed meeting. Now, there's a lot more going on than just the Fed. You've got the Kavanaugh thing, you've got the UN, you've got tariffs. I mean, you've got it all, right? You've got all of the usual catalysts. And there are a lot of potential headlines in the headline minefield. Not only this week, but last week, and they'll still be there next week. That kind of uncertainty is going to keep pumping volatility into the market. So neither side is really impressed, I would say, in the last 3-4 sessions. We went and did 47 on Friday. They fell right out of bed, but the bears haven't been able to follow through with it. They've made 2 runs at trying to break below the weekly pivot. Neither one has worked. One on Monday, one on Tuesday, and it starts to mirror what happened last week when they failed to take out the weekly pivot on Monday and Tuesday as well. If the reaction to the Fed is positive, then you could see a steady move up to challenge the all-time highs over the course of the next few days. If the reaction is negative, and if they finally dig around and find their car keys at weekly pivot and turn it into resistance, then you can see a move down to test the daily midband. It's not far away. It's right down here at 2908. You're not talking about something that's miles away. And then we can figure out if this time around it wants to continue to be support or if they have something below it. So all these questions are up in the air as we head into Fed Day. My suggestion is to do what I'm going to do this morning, which is just sit back a little bit, watch it open up, see if there's a trade there. But if it's more compression, then we're not going to be doing much now until 2 o'clock. And sometimes you just have to chill. If there's volatility this morning, we'll trade it. If there's none, then we won't. It's just as simple as that. And that discipline is what's going to keep your head screwed on straight for the moments when the market does start to move, so you can deploy capital and harvest handles and do all the things that you want to do. All right, everybody have a great day. We'll be out with a bunch of stuff on social. Until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.